Thank you for tuning in to the Miller Money Sense podcast. I'm your host, Jared Miller. I wanted to do an episode to kind of talk about the things that occurred this week. There's been a lot of events in terms of the stock market and in terms of cryptocurrency and just investing in general. So I wanted to spend some time with you all just to kind of talk about some of these things, give you my opinion on what things or where things are headed, and just cut it up and we have a good time discussing these topics. If this is your first time tuning in, be sure to click the like button and subscribe to the channel for future content. There's a lot of crazy stuff this week. We're going to go ahead, we'll jump into it, and I'm just going to start with the stock market. So if you think about it, the stock market, in my opinion, it's just been on something funny style lately, in the sense that when you think back to when COVID first broke out, right, once they announced that it was a pandemic back in March of 2019, it's just weird that the stock market has always continued to increase in value, even though we've had quarters where the GDP were down, and obviously some quarters they bounced back because some people were able to go back to work. But it's just interesting that production is nowhere near, from an economic standpoint, where it used to be, but for some reason the stock market keeps going up. So I say this not to necessarily try to influence you all to stop investing in the stock market. I continue to invest in the stock market. My wife continues to invest in the stock market. We believe the stock market, or at least we use it as a long-term investment tool. So I'm definitely not the type that's going to jump in and try to necessarily make any quick money out of the stock market, because there's just so many things going on. There's a lot of games being played, which we'll discuss some of that within this podcast. But just continue. If you are investing in the stock market, continue to invest in the stock market. The main thing is we want to focus on diversification, right? Being able to not solely rely on the stock market or one particular investment vehicle, if you will. It's just like, if you think about this week, if you look at the major indexes, S&P 500, NASDAQ, and obviously the Dow Jones Industrial Average, there were times where it dropped, some days 2%, one day it bounced back up 1%, and then I think another day it might have dropped 1.5%, or even back down to 2%. So just very weird activity that's happening within the stock market, and I can't quite put my finger on it. And I haven't been able to do that even since since the pandemic originally kicked off, simply because, again, I don't understand why it's so high and why it continues to grow, with production being down in terms of our economy. Unless maybe it's due to inflation, for the Feds continue to print money or producing these economic stimulus packages to keep the economy afloat. So just thinking about it, if you listen to some of the news, I know there's a lot of things going around on social media this week, which is a good thing, because ultimately, as investors, we all need to be aware of what's going on, and we also need to share information amongst each other. We need to understand where the trends are, where things are headed, and also where the pitfalls and stuff like that may lie. So there was some news about how the indexes, the Dow, the S&P 500, they were down due to the GameStop incident. And that's not true, because if you think about GameStop, Dow Jones Industrial Average is 30 companies. They're not listed as a company on the Dow Jones. And then the S&P 500, GameStop is not listed as one of the top 500 companies at this point. And I think at one point, GameStop may have been on the S&P 500, maybe back in 2007 for several years or whatever. But since we're transitioning to a more online, commercialized or economy, if you will, where people are just buying things online, a lot of the brick and mortar stores, as we know, are starting to close, and they're just not having the amount of sales and production that they used to. And obviously GameStop is a part of that trend now, and they're on the downside of it. So just for everyone's awareness, if you haven't been following, you heard about the retail investors. So retail investors are individual investors like us. We're not associated to any company. We simply go online and we buy stocks, bonds, assets, or whatever you may have, right? And then you also have your institutional investors, which are your hedge funds groups, your companies. These are going to be like larger entities, if you will. So what happened was there's a site called Reddit. And I don't know a whole lot about Reddit, but from what I'm hearing is it may be some sort of social media platform, or at least a forum-based platform where people can go on and they can have conversation about various topics and what have you. So apparently you had a forum where a group of retail investors, they decided that they was going to put out this message to have everyone just buy GameStop stock or shares of GameStop stock all of a sudden to increase the price. And so what happened is the institutional investors, they are the ones who predominantly, in most cases, control the markets and how they swing, right? So if they feel a company they have a forecast of they're having good production, or they having quite a bit of sales, they will go what we call long. They will buy into that company stock, right? Or if they have a company like GameStop that's obviously not as strong as it once was, they will go short and sell that particular, or make a bet that that company stock will decrease in value. So what happened was the retail investors, they started buying GameStop, and the institutional investors, or hedge funds in this case, they shorted the stock and they lost a shit ton of money. So there's been sites, there's been nothing consistent, but I've seen anywhere from 19 to 70 billion in total losses for these institutional investors for going short. So what's happening is, a lot of investors or retail investors, they're using Robinhood, they're using Webull, Stash, all these different sites or apps where you can go in and you can buy these individual stocks. A lot of those CEOs and leaders within those companies, they came out and essentially shunned the retail investors, right? Saying that, hey, we can't have retail investors on sites like Reddit and whatnot, essentially persuading the markets, which is interesting because that's what the big boys do all the time, right? So a couple things I want us to understand out of this, right, is this goes to show you all that these apps and these different companies, they're never on the retail investor side. They're never on the small or mom and pop guy or side, if you will. So you had a lot of hedge funds, institutional investors, they start complaining, saying, hey, that's not fair, yada, yada, yada. But again, they do the same thing all the time. So now it's gotten to the point where they've gotten the SEC involved, and they're trying to have it to where essentially retail investors can't control the markets like that going forward. I know at some point Robinhood and even Webull, they may have suspended a certain trading options, so like allowing or preventing investors from being able to go in and buy the GameStop and manipulate the market and things like that. So when you really think about it, it just shows that we don't live in a fair and just society, right? And we always know this. But going back to GameStop, the same thing also occurred with AMC and also occurred with Nokia. Obviously, AMC is a dying business at the moment because due to COVID, people are not going to the movies as often as they would like, right? And I didn't even know Nokia was still in business. So when you think about this, the institutional investors are right in the sense that, hey, these stocks should be dropping because these companies are just not strong at this point, right? But ultimately, they can't handle being on the wrong side of the trade, hence why you have all the madness that you have this week. and stuff. So a lot of people online, social media, I'm mostly on Facebook. A lot of people are saying that this is not fair and they shouldn't do retail investors like this. They're saying that they want investors to be involved, but ultimately, once we start getting involved, then they sort of start setting these limitations around what we can do. So I want everyone to understand, right? This is a battle that we're not going to win, and we can't win. The SEC, along with your Weebles, your Robin Hoods, they're in the same bed with these big hedge funds and institutional investing firms, right? So this is a battle we are not going to win. So while it is entertaining, and it is, I think it's somewhat just because they do manipulate the markets most of the time. So why shouldn't we be able to do it? I just want everyone to know that the SEC is not going to come up with some form of law or regulation that's going to work for the small investor. And so I'm going to talk more about that, just a little bit later and whatnot. But one of the things, if you notice, right, and this is going to just paint the picture into where we're headed. The SEC and these large firms, they put out all these stories, all these information online. And really what they're trying to do is manipulate the retail investors and try to have you think a certain way. So we need to start thinking more from a logically standpoint of what it is that they're trying to accomplish. And I give you a good example. You're starting to see a lot of articles where, and it's even coming from other countries as well, where some of the people that are over monetary policies or whatever for these countries, they're saying, hey, if you invest in Bitcoin or any cryptocurrency, you must be willing to lose all your money. So, yeah, when you look at that, right? Yeah, that is a risk that you can lose all your money, but the same thing can happen with the stock market. The same thing can happen with the housing market. Let's use two prime examples, right? The Great Depression back in 1929. Everyone was investing in the stock market, and most people back then lost everything. A lot of people in 2007 through 2009 was well invested into the housing market, and they lost everything, right? And even back then, both those markets, the stock market and the housing market, they were considered markets that our government was fine with us investing in. So you have to think, okay, what is the end goal here? And let me tell you what I'm noticing. So you have people coming out saying, don't invest in Bitcoin, don't invest in cryptocurrency. But if you notice, you are starting to have a lot of wealthy people request Bitcoin and other forms of cryptocurrency over cash. So when you really think about it, it makes you wonder if the USD or United States dollar might be on shaky grounds right now. Because, for example, there's a guy, I think his name is Patrick something. I don't know his name exactly, but anyway, and I'm going to pull from some sources that I'm going to include in the description box. But essentially, this guy here, let me find it here. He essentially had not one, but two bars in the middle of Hell's Kitchen in Manhattan, right? And apparently due to COVID, they haven't really been performing well. I think he went from having hundreds or even maybe thousands of visitors a day to now just a handful of people visiting the bar throughout the week. And so he put both bars up for sale, and he told them, or he's selling them, but he's making it known that he wants Bitcoin or Ethereum, which is an altcoin or another form of cryptocurrency. He prefers that over cash. So why would a man or a person or a woman in this case, why would someone want to sell their business in cryptocurrency in the middle of Hell's Kitchen, where businesses are very expensive, right, to run and operate, for Bitcoin? So you would think, okay, well, they're telling us that Bitcoin is not trustworthy. They're telling us that cryptocurrency, can die. Why are these wealthy people investing in it in the magnitude that they're doing? So for example, if you start looking at some of the bigger investment firms like JP Morgan Chase, Grayscale, Fidelity, a lot of them are gobbling up these cryptocurrencies and they're spending millions on it. They're buying it by 50 million, 100 million, 200 million, or what have you. So it leads me to start thinking that these wealthy people and these firms are working with the SEC in a sense that they want to get their hands on all of this, all the cryptocurrency, and run up the price before the retail investor, which is us again, will be able to have access to this stuff. And what I notice is, if you think about just any asset, any technology, whatever, the most money made is at the very beginning when that technology platform, asset, whatever it is, first kicks off. So that's why the institutional investors are so hell-bent in getting involved, is because they want to gobble up all the money. And then what they're going to do is they're going to work with the SEC to legitimize this cryptocurrency at that point. And then they'll start selling it to retail investors in terms of like ETFs. They may have some mutual funds or what have you. And I think they're starting to do a little bit of that now. I don't know how official it is, but I think there are some different things out there, like some trusts and stuff you can buy that contains cryptocurrency. But I think what they're trying to do is get their hands on the assets and all of that, and then at that point pass it to us. And when they pass it to us, let me tell you all what's going to happen at that point. You're going to start getting the same returns that you're going to get like you would in the stock market. You're going to get your 6, your 8, your 10% returns a year. And from an investment standpoint, from a retail investor standpoint, that is a good return over a long period of time. And that still is better than not investing at all. But what it tells me is that the SEC, they're going to side on the side of the institutional investor and let them make the money, because ultimately I believe some of them are being fed some of the money from these different investments. We already know that there's people in Congress within the United States government that has or have access to Bitcoin and currently own Bitcoin. So what I really want everyone to understand is we need to not focus on these scare tactics. When it comes to investing, you need to invest money into something and be willing to lose it. Or better yet, don't spend more than what you're willing to use, right? For example, I wouldn't personally go spend $30-some thousand a day for one Bitcoin, but hey, I might throw in $5,000 in the pot, because I feel personally, and this is me, everyone has their limits, I could lose $5,000 and it wouldn't change my whole situation, right? It wouldn't prevent me from paying my bills. It wouldn't prevent me from putting food on the table. It wouldn't bankrupt me or what have you. So this whole, you need to, essentially be willing to lose it all, that's BS, because we're seeing all these different firms getting involved, right? And if you notice another story, and this is kind of a couple weeks, maybe a month or so old now, there's an NFL player, his name is Russell Okung. He is asked to be paid Bitcoin in his salary. So essentially he's saying, hey, don't give me cash, give me Bitcoin. Or a certain amount of it is paid in cash and a certain amount of it is paid in Bitcoin. So it just makes you wonder, like, how trustworthy is the United States dollar at this point? Because when these people who are very wealthy, very rich, are starting to request different forms of payment, it just makes you think, are we pursuing the wrong currency? And now, while you have a lot of institutional investors talk negative about cryptocurrency, you do have a few that speaks highly of it, right? So I'll use Mark Cuban for an example. He recently put out a report this past week where he was like, he's been dabbling around in cryptocurrency for almost a decade now, really. So this just goes to show you that, yeah, a lot of them hadn't been saying anything about it, or they had negative views about it initially, but they had their hands tied into, or hands in the pot early on, while we wouldn't really, being bothered with it at the time. So one thing, like if you look at Mark Cuban, he got rich off the stock market. He essentially had a company. I think he may have sold it for 4.2 billion Yahoo shares back in the 90s or something like that, or maybe the early 2000s. But you notice nobody's selling anything and requesting shares from the stock market. These people are requesting cryptocurrency. And you have to ask yourself, well, why would one request cryptocurrency over actual money, right? We're taught that we need money, some sort of fiat currency, as a way to be able to make purchases and what have you and invest. But it seems like that's starting to transition into you hearing more and more stories about people wanting cryptocurrency. Another billionaire, he is owner of, I think it's called the Bridgewater hedge fund. His name is Ray Dalio. I've been following him for several years now. He, at first, maybe not even a year ago, he came out talking negative about Bitcoin. Now he's signing off on Bitcoin and he's saying, hey, it's a hell of an invention. They really know what they're doing with this. So now you're starting to see, all these big time billionaires and millionaires officially sign off on it. So what I'm going with this whole podcast or this conversation, right, is we need to start diversifying our portfolios. We need to start thinking in different terms, right? When we think about history, right, we pull up these charts, we say, well, hey, the stock market performed X, Y, Z, or it went up over time over the past 100 years. And while that's true, everything doesn't always stay the same. And just because something worked for maybe a baby boomer or a previous generation doesn't necessarily mean that's going to work for us as a millennial, right? Or as someone in the Gen Z group. So diversification is more important now than ever. So what I mean by that is this. We need to have assets that are not all tied to a fiat currency. A fiat currency is a currency that is controlled by the government, the US dollar, the peso, the won, the British pound. Because what you're noticing is there's a lot of corruption right now in politics and within these governments. And the investor is starting to try to figure out, hey, how can we all have a decentralized currency around all the mess that's going on? Because like if you look at the United States dollar, right? Again, they've printed money the whole time during this whole coronavirus pandemic. I think Trump, he signed maybe 2 or 3 stimulus packages. And now it looks like Biden's going to sign a stimulus package, I think for 1.9 trillion. So they're spending and printing trillions of dollars just to keep the economy afloat. And that really goes back and explains why the stock market is somewhat doing well over the most part, or for the most part since the coronavirus, is because they're essentially printing money and they're buying back into the market, and they're keeping the markets propped. So that's a good thing short term, but not necessarily a good thing long term, because eventually I feel like you had to show real production. So like, yeah, I'm in the stock market for the long term. My returns over the past year, 2 years have been fantastic. Or really, if you want to go all the way back to the last decade, returns have been fantastic since the last recession, right? But you don't want to put all your faith into the stock market. You don't want to be 100% in the stock market. You don't want to be 100% in real estate. You do want to own some real estate if you're comfortable with owning it, right? One of the things with real estate is we will always need housing, somewhere to live. And the good thing with real estate is no matter what currency we have to use, you're going to have to pay somebody currency for that particular real estate. So if I have a house, and just say, for example, if the United States dollar is not the thing 5 years from now and Bitcoin's the thing, well, you pay me in Bitcoin. So you want to be able to make sure that you have your portfolio that's diversified, or that is diversified. So I say, me personally, I invested about 5 to 10% of my portfolio into cryptocurrency. It's enough to where if things continue to go the way they are in terms of cryptocurrency, I will see some magnificent growth in that, right? But also, if the government, some reason around the world, get together and decide to ban cryptocurrency, it won't necessarily put my portfolio in jeopardy. I would just lose 5 to 10% of my wealth. So yeah, really understanding that diversity is more important now than ever, because we don't know what's going on. We don't know where things are heading. We don't know what's going to happen. And I know that's been the case pretty much since the stock market and all these different assets have been in play. But it's just interesting to me that a lot of emphasis is put on cryptocurrency, in a sense that they don't want you to invest into it from a retail investor perspective. But now all of a sudden you have all of these millionaires, billionaires, hedge fund owners, institutional investors coming out, and they're starting to say some positive things about it. So I say this to say, if you have any extra money lying around, you may want to try to consider experiencing or playing around with cryptocurrency, because I feel if you get in now, you can reap some major gains in the near future. So that's pretty much all I had today. That concludes my podcast. I hope you all have a great rest of the weekend. Again, give me a thumbs up if you like this video, if you found the information valuable, and also subscribe to my channel for future content. I plan on ideally every week doing some sort of podcast, maybe around the weekend, to kind of just go through the current events and what happened that week in terms of the economy and just finance in general. So with that being said, thank you again for tuning in. I hope you all have a great rest of your day.